Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, May 26th, 2022. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice here the ES has pushed higher above the previous session's highs and is now testing the top of this narrow 5-day range that is developed throughout the course of the week. Again, this market has been going up in a very slow pace and can take the elevator down very, very quickly, as we've seen just last week. 4 days up and one big day down. A few days up and one big day down. So again, any strength here is still an opportunity for bears to defend and rotate this thing back down. We are in that bearish PEMA trigger zone right now. The bearish PEMA trigger zone has been very, very reliable ever since the change of bias early in April. And any failure, again, to hold above the previous session's high price of $39.9775 could open up an opportunity to sell this thing back into the range, say back toward $3,900 in the biggest sense here today. Overall, we likely will stay within range today based off of the extended holiday weekend and likely lower volatility and lower volume coming into play. But that previous session's high is going to be very important. The ability to push through that 4,000 and hold could open up a push to 4,100, the top end of the 2 to 3 week trading range. However, until price can get above 4,100 here, we will likely continue to see any push into that zone dealt with selling pressure back into the range. So right now, again, previous session's high is going to be very important. Any rejection there could open up perhaps even a bearish outside day down toward 3,900. If we take a look at the NQ, you'll notice the NQ is also within range. 1, 2, 3, 4, 5, 6 days within this narrow trading range right here. The push through the top end of the range could open up a rally back toward the top of the 3-week range here. But again, as we mentioned before, unless price can push through 12.5, any push into that zone could still be seen as a selling opportunity. As of right now, any push through the top end of this 5-6 day trading range could offer an opportunity for bears to defend, trap, and reverse back down. This 6-day narrow range is significant, and we could be looking at further range-bound action heading into the holiday extended weekend here in the United States, followed by what could be expansion at some point thereafter. So again, not expecting significant expansion to the upside. Keep an eye on the previous session's highs and the 5-day highs prior. Any push beyond that zone could open up a little bit of upside toward 12.5, but again, the expectation is for bears to come in and defend at some point. If we take a look here at crude oil, crude oil is up at the moment about 0.2%. Very narrow 5-day range has developed. You can see it down here. If we open this up to a 5-day range now, only 30% of average at the moment, with the potential of about 14 points of range expansion here at some point. Again, we could see further quiet price action here heading into the weekend. Any push to the upside, say 115, could offer an opportunity to sell it for a rotation back down toward 100. That would be about 15 points, and right now 14.75 points is the expected move here on the high end in terms of range. So we're building energy. Any push into 115, 116 could offer an opportunity to trap and reverse back into the range. Looking at Bitcoin, this is now 10 days sideways. 1, 2, 3, 4, 5, 6, 7, 8, 9, and now a developing 10th day. This is huge. As I mentioned before, you don't tend to see a rejection and then hold for 10 days and then rally. Instead, you see a rejection, and then if you're going to hold for 10 days here in a very narrow range, there tends to be a long liquidation that follows. So this is getting very hairy here in terms of the potential energy that's built up in this range and the potential to see a big time move up ahead. Over 12,000 points, somewhere between 10,000 and 12,000 points of movement could be seen ahead. If we fail at 28K, again, dropping 10,000 points would take us into the 18K zone. Dropping 13,000 points would take us down into the 15K zone. So again, we could be looking at a significant expansion at some point down the road. Until then, further range-bound price action is likely to persist. Taking a look at ETH, this one is down 7% right now and is beginning to see expansion to the downside. This is huge. We mentioned before, if this thing starts to break 1900 or 1850, we could be looking at a significant move of somewhere between 1,000 points and 1,200 points of movement. Just 1,000 points from 1900 would take you into about 900 down below. We're starting to see that downside break at the moment. And again, if price continues to hold below the breakdown point of this range, any pullback could be seen as a selling opportunity as this thing starts to hunt much lower. Remember, any break here at that 1900, subtract 1,000, and we're looking at least 900 as the next downside target. That would take us right into that level right there, which is the 100% target of the key range that developed earlier this year. 902.5 is that 100% target. To refresh your memory here, going back earlier this year, this initial sell-off and the bounce gave us this major key range, and again held right at this key pivot here at about 1700, which has been significant support, but breaking down right now could extend this thing into the downside targets that take us down at least to 900. So that could be another again 50% haircut from where we currently are, let alone from where we were just earlier this April. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.